Hi, gang. Little trade recap. Great morning. Great morning. We had two trades. I think everybody just took the first one and done. And I'll be honest, this second trade here, I should not have taken. I was green on this first trade. Should have called it a day because I had some drawdown on this. I added in here and then added in when we tapped discount. My average was right here. So when we had this pullback, I was green or red, and then I sold this. I just started trailing as soon as we went down. So and the setup's there. I'll go over it after we go over this first trade, but I should have just walked away after one trade. That's all there is to it. You know what I mean? The way the market's been lately, if you come in and you execute flawlessly on your first trade and you bank some cash, then I should have just walked away. But either way, two green trades. Happy with that. So you guys seen the daily plan this morning, right? I had mentioned we'll jump on the 4 hour here. We had this big sell-off. We were selling off overnight, like down 200 points. And I had said that I wanted to see these lows get taken, right? And we also had a -4 standard deviation right below this level. But I mainly wanted to see these lows get taken, this fair value gap hold right here, and stay above this level. And I also had mentioned on ES, if we create SMT, that's a bonus. So we'll go over to ES. And I can show you on ES where we create that SMT. So jump onto the 4 hour on ES. So we came down and took this low right here, right, on NQ, but didn't take it on ES. So a lot of the times when we have these big sell-offs overnight, I won't chase the short down. I'll wait until that liquidity gets taken, and I'll look for some type of reversal. Now, if we run these lows, and we trade below, like we keep creating lower highs, and we get below this level of 23,008, and we get below this level of 6373 and invalidate these fair value gaps, then I'll be looking for a short. Then I feel like there's very bearish order flow, and we might continue higher or lower to find where the real draw on liquidity was. But looking at the chart here, I just felt like these lows were probably the draw, and we were right? So I was saying when we take these lows, I'd like to see displacement back above the level or some kind of inversion gap, right? So we'll jump down on the 2 minute, and that's exactly what happened. So we had the game plan, right? We wanted to see those lows get taken. We wanted to see us, tap into that imbalance, stay above the level, and create some kind of SMT on ES. Exactly what we got. So I was pretty patient. I didn't chase this or anything like that. I noticed that we came up, displaced back above the level. Let me get this out. So this level here, I consider this a hold right here. I know it's not perfect, but I still consider that a hold. So I wanted to see us get back above the level with the displacement candle, which we get right here. Okay, and at the same time, we get that displacement candle, we inverse this fair value gap. So when I see all that, that's everything we need. I'm sniping these. That was my 3 trades last week. Exact same thing, except last week we had better level bounces at the bottom, right? So we got our SMT. We've tagged into a high time frame imbalance. So price has rebalanced. It's efficient now. We get displacement back above a key level and an inversion gap. Like we got to take those every time. Those are the trades where, 60-70% of the time you're going to make money on them. So my target was up here. I really wanted to hit this, to be honest, you guys. Just an area that I had my eye on, but I also was scaling out when we hit this, and we got our level here too, right? So this level's definitely a clean level. We bounced off it, rejected, and bounced here. Now that we see this structure, I'm happy that I scaled out most and trailed my stop. So I trailed my stop. I think I started scaling it 1-1-1 when we're at the top here. I had like one contract left, and I got stopped out in profit right there. So, I would have liked to get more out of this, but at the same time, candles were moving. Today's one of those days where candles were absolutely ripping. Okay, like this one candle. Let's just see how much this one candle is here. And how I do this is you hold shift and then drag it down. So that one candle is 40 points. Right? 40-point candle. So just say we do start to, retrace down, that they respect this level and they do want lower. You don't want to get caught in a 40-point pullback. I mean, if you can handle it, then that's fine. But if you catch 30 points on the Nasdaq and you don't scale out and set your profits to break even or set your profits to a little bit in profit and you let it go against you, that's a bad trade in my books. For me, that's a bad trade. You know what I mean? Like I was up 30, 34 points. I didn't scale out. I didn't set my stop to break even, and now it's a red trade. That is a bad trade for me anyways. You can manage it any way you want, but as soon as I'm up 20, 30 points and we're catching a reversal, I'm going to pull my profits and set my stop to a little bit in profit. If I get the move, I get the move, right? Awesome. If I don't, I pulled my profits. I feel like I managed the trade properly and I just go on about my day, right? So that was the trade there. But again, you guys, we had SMT, right? This dotted line here gives us our SRT. We got the sell side liquidity taken. We've tapped into this imbalance. We displaced back above the level, and we have an inversion gap. So these have been really printing lately when we have all this stuff. So just be ready to snipe it every time, all right? Now up here, we'll run through this trade. Now I did add on the bottom here, then I added again in the when we came up to our, like right at the top here, added. So my average was right about in here, right about in there somewhere, right? So I added on the 2 minute inversion right here. So my first add was right when this candle opened. Boom. We pushed down and then we got this big pullback. So we came up again. Now, why did I take this trade? Well, we're respecting a key level, right? We've tapped down. We broke below this level, retested it, pushed down. We also have like an area of kind of like support here, right? Support/resistance. And I noticed that we tapped that right here, pushed down. We have our level and we have discount of the range. So right here, from this swing high, I draw my fib. From the swing high here to the swing low, this gives me a 50 to 60% area where I expect price to reject, and that's what it did. I had to add in to get a better fill, because a lot of the times when we do these fair value gap or these inversions, we know that it can retrace back a little bit, right? So, I probably shouldn't have taken it because it was a stressful trade, and we were chopping it up and talking, and I wasn't too focused in on it, to be honest. So, but either way, as soon as we started to go on profit, I just started trailing and got out a little over like 20 points or something like that, 25 points, something like that. So decent trade. Now I just want to run through these ICT level models. Oh, another thing too, let's go on the 15 minute. So this is how I drew my standard deviation, okay? And I can go over standard deviation with you guys if you want a little more, but I don't really use it too much. It's kind of like an ICT concept thing. So when I see that we're moving down and we push back up and continue lower, I want to see where price might be moving to. If we don't take liquidity, then we could be going to some kind of standard deviation. It's just an input where we might see a reversal in price. Now, how do I draw that? I take it, I'll just actually grab it here. So if you go on to here, template, I have my fib or my standard deviation. So all it is your fib. I'm going to click on it here. All it is your fib with these inputs. So I have 1, 0, -1, -1.5, -2, -2.5, -3.5, and -4. So ultimately, -4 is, there's more. There's lots more inputs, but I usually look for the -2, -2.5, and -4. That's why I have them red, so they can stand out, right? And we came down and hit -2 perfectly and hit our level perfectly. So that was a nice reversal we caught there. But I have them drawn out. How you draw them is you go from the swing low to the swing high, just like we do a fib, but it's just a standard deviation. It's a measurement where price might retrace or where price might be delivering to. So, and a lot of PO3 traders use them. So because PO3s, you're not sure where it's going to go after, right? So if you get in on a good PO3 entry, a lot of PO3 traders will use these standard deviations as areas where to exit the trade or scale out or set to break even. I use it in conjunction with liquidity, my levels, and fair value gaps. If I see that they all line up, then that's just more conviction for me. But I don't just trade a reversal on a -2.5 or a -4. So that's the one thing I did mention this morning, those SDs, standard deviations. So I do want to touch on one thing real quick too. So I think everybody's good with the trades that we did take this morning. We had a couple ICT level models absolutely print. This is one of my repeatable setups that I love to trade. and it basically sparked the sell-off. So you see, we're kind of chopping around our level. Then we finally get displacement right here, right? We get a good displacement candle through the level. And I know that I repeatedly talk about this model because it's a great model to trade. So we draw that, obviously, again, swing high, right? To our swing low, we got that fib. Now we have this fair value gap open in the fib, right? So right there, you can enter when we clear that low. Boom. Okay? First target right there, second target, next level. Or that sell side or a discount range, right? So it's just a really good repeatable setup that happens every single day. It's something that I trade all the time, and we actually had it again down here, right? So we come down, we displace through the level right here. Now I'll jump down on the 1 minute because that's where I drew my SD or my fib on the 1 minute there. So where is it here? It's on this one right here. So, yeah, we draw it from the swing high to the swing low. So right here, swing high to our swing low. So right now it's on my SD, but if I go over here, you can save templates. That's what I do. So I have my fib and my standard deviation. So if you guys wonder how I switch between them so quick, I just have templates saved. Right there, there's our discount range. And on the 2 minute time frame, we have our imbalance right here, right? So there's our fair value gap. We have multiple of them. So sometimes a lot of traders will take both of them like that. Boom. So that's it. That's the ICT level model. We actually had a couple print on gold too. So let's look on gold right here. This morning it would have been at 4 a.m. Swing low. Swing high. What do we got? Fair value gap right there. Now there's multiple fair value gaps. But why do I take this one? Because this is the one, now anyone can hold, but when I have 3 fair value gaps, I feel like these are breakaway gaps. The first fair value gap got tested, we push up, but we haven't taken a high, right? So when we come back down, I want to see the fair value gap that's in the discount range hold. Okay, so that's my main one I'm looking at. Can it come down and tap these ones? Yes, you have to be positioned for that, right? Then go up, but I really want to see the fair value gap that's in that 50-60% range hold. That golden pocket. That's the golden pocket. All right. So that's what I got today. Charting session. So I think you guys see why we took those trades. And the first trade we took, honestly, that was 2 trades last week. I took that too. Wednesday and Thursday. We took those trades. So keep an eye out for that. Fair value gaps, displacement above a level, liquidity taken, SMT inversion. There's really not much more we can ask for. Like I was in that a little early, to be honest. Like if you look on the 1 minute, I caught the 1 minute and I had a great entry. It would have been the same on the 2 minute, but the reason why I took it on the 1 minute and didn't wait for the 2 minute was because we had a 1 minute gap, and we have the SMT, we have a fair value gap, the high time frame imbalance, we got the sell side liquidity taken. So I felt comfortable entering a little early on that, but the 2 minute would have been prime too. 2 minute would have been prime because we have the 2 minute buy setup plus the inversion. So either way, banger morning. This was a high risk trade right here. I'm thankful that I'm green on it. I was a little bit sized too. I went on with 10 micros and then added another 10. So I'll be honest, if that went against me, I would have been disappointed with myself. So just recognize that as a trader, that I'm recognizing it as an individual that I shouldn't have taken it because I took the first trade and it was profitable. I should have just walked away after that. Candles were moving pretty quick. You don't want to get caught in something that's going to go against you and turn a green day red. So, all right. Anyways, that's what I got. We'll get these levels charted later, and we'll back in to crush it this week. We got a lot of news this week, NFP and stuff. So it's going to be a big week.